Alright, hey, what's going on, everyone? I think this is working. I am experimenting with a new setup today, using a different software to broadcast, and so I'm not sure. This was a little bit of an experiment, so hopefully this is actually working. Even if it isn't, not a big deal. There's not much to say about today's trading day anyway. Oh, my webcam is really choppy. Yeah, this is an older webcam because my the one I usually use broke because it overheated, and this just looks horrible. Okay, let's try this. All right. Let's try that. Yeah, just get rid of the webcam altogether. Okay, so today's trades, there's really not much to talk about. It ended up being, I mean, right now the market is closed, so we can talk about how the regular trading hours went. I started off the day taking a breakout trade on the nat gas or crude oil, one of those. And yeah, I guess it was the crude oil because you can see that right here. So let's go down to the 5-minute chart. So the breakout system for any of the energy assets is a little bit different. Instead of using the 5 or 15-minute range, or the opening 15 minutes, I use just the opening 5 minutes because I don't really have much of. This is way more expensive per tick, per point. So I want to take on less risk, and it moves a little bit slower anyway, but it's more expensive per move. So with that being said, I'm just going along with the guidelines based on where I learned this kind of technique from, and I learned it from. The person I learned it from is doing it based on the opening 5 minutes. Although if I realized if I left it, I would have gotten filled, wouldn't I? Okay. All right. Well, I missed out twice, basically. All right. Okay. So here's the system, right here. Where's the 9 o'clock candle? So the energy market opens at 9, and so the idea is this right here. You can tell this candle right here. So this dotted yellow line range. So when the first 5 minutes were up, right around 9:10, it broke down, but it didn't close down. It came right back to my stop and stopped me out immediately. And so this right here is a total of 38.97 to 39.18 is a total of 19 points. Just put this order in here. If I were to take this, let's just try this. Let's try this a different way. If I do 38.19 and my stop loss for a buy is 38.97. So $200. Yeah. So it's actually a little bit off. So $210. This is way more risk than I'm actually willing to take on right now. A $200 trade, I have to risk $200 both ways to take a long down. To take a long up, or a short down. Either way, and it was just really outside my comfort zone. So right away, my mentality about this is like, ooh, I don't know. This is new. This is riskier. I know I had a pretty good string of wins the past couple of weeks, but I don't know if I want to start ruining all of that by taking on way more risk than I should. My general rule of thumb is I like to only risk about 2%, and I've been a little bit generous with that because I had such a small account. Even with, so I had around 20. I started off with about $2,500, and a 2% risk is like, you know, $50. But because it was such a small number, small account, I allowed a little bit more. I allowed up to like, you know, $100, which would make that more of like a 4 to 5% risk per trade. So so I knew I was kind of being very percentage wise, I was being more risky than I usually am, than I've been taught to. But with the increase in capital now, I have a much bigger account size now. I was more willing to take on the risk, but $200 for one trade both ways was just way too much. So what I ended up doing was I went down to the 1 minute, and I picked just, where's the open? 9 o'clock. So right here, I picked just the lower candle, which happened to be the opening candle, the opening 1 minute candle. So I think this was just $100 or 150 or something like that. And I was encouraged for a solid minute, right? Which is when I took the trade, and then I was stopped out immediately. So today I started off the day taking an opening breakout trade on the oil, or on crude oil, one of the most expensive assets to trade, and one of the riskiest, right? This is the same asset, if you remember, a few months ago, or a few weeks ago, I should say, went negative and just blew everybody's minds away completely. Like, how does something go negative? Well, this is what went negative. This is the same exact, well, it isn't the same exact contract, because this is the August contract, but it's the same asset class. And so I knew I was messing with fire here, but I got burned. Really, there's no really other way to put it. I got burned playing with crude oil. This is the same kind of concept with the opening breakout trade, which is starting from right here, right? If it and you can see in hindsight, I could have taken that loss and have been like, you know what, I'm not gonna go short today. I'm gonna go long. And as soon as it broke outside of this yellow line here, which indicates the top of that range, it worked. I came down. See, and here's the thing: if I had a narrow stop, I would have gotten stopped out. If I had my stop like somewhere over here, if I only took half the zone, I would have gotten stopped out, and I would have been pissed. That's another loss. But then this is one of those things, you really need to have enough wiggle room for things to really work out, or you let it come back, take a confirmation trade or something like that. I don't know. All I know is that in hindsight, there's hindsight is 20/20 and all that, of course. But you could say that. Come on. Okay, so you could say that there was more than enough room to have gotten 3-1 on this twice, apparently, and this large range zone would have held. And so I would have been risking 790. Is that right? That doesn't sound right. Let's take a look here. I don't think this is right. Amount okay, so they're not going to give it to me in terms of dollars. What you can see is that let's see if I were to do this. Okay. All right. So what? So okay. Sorry about that. Okay. So what we can see is it's 20. It's a 21 point loss. Yeah, I did my math wrong. It's not 19 points. 21 points. I can't do math. That's why I have these tools to do it for me. Okay. So it's a 21 point risk and I would have gotten 3 to 1 would be 63. 21 times 3 is 63. So 63. Just add a 0. It's a $210 risk to make 630, and I could have easily made that, in hindsight, being 2020 and all that, I could have made that, twice here, once here, and then again in the past couple of hours. There was room for that it bounced back and forth, and this zone held twice. Now, that is a great way to drive yourself insane. Like for me right now, I used to look at this and I used to get really pissed, and I used to be like all coulda, woulda, shoulda about it, and just go down a spiral and be like, you know what, next time, screw it, I am gonna take a $200 risk. I am gonna take a 21 point risk on an opening breakout trade on a 5-minute time frame, risking $200 and in order to make $600, and that's fine. It's just a little outside of my risk tolerance right now, because my it goes against the hard limit of the percent risking, no more than 2% per trade, and also it makes it so that like I think everybody has a different level of we all treat money a little bit differently. The best example of this is if you go to a casino and you see a $10 blackjack table. There's probably not too many of them because it's so cheap, and they're probably always full because everybody wants the cheap blackjack table where there's only let's go $1 per hand, $5 per hand, $10 per hand. Those are some of the lowest denomination blackjack tables you'll ever see. And when you go into any casino, you're gonna see, if it's not busy, you'll see plenty of them. But if it is busy, if it's a weekend, or if it's a nighttime where there's a local concert or show or a band coming through or something like that, you probably won't see them. The casino wants you to use more money and will force you into higher stakes, like 25, 15, 25, or even $100 a hand. The thing is, the rules don't change, right? Blackjack is still blackjack. You can still take, you go to the gift shop, buy the cheat sheet, whether you are betting $100 a hand or $10 a hand, the game is exactly the same. Unless you're playing one of these weird denominations that have Spanish 21 or any kind of weird denomination or derivation of the game, the rules are the same, right? The dealer has to draw until 17, has to draw past 16, and until he hits 17, pretty much, right? The rules are the same, but people play completely differently when they're betting $100 a hand versus betting $10 a hand, right? You'll see crazy things, crazy differences in play style, even though the rules are exactly the same. And that's all a function of human emotion. And to me, this is exactly the same kind of thing. Yes, I can get 3 to 1. I'm not scared of taking 3 to 1 on smaller, quarters like on the S&P. But I am scared of taking quarters or taking opening breakout trades with $200 risk on crude oil for now. And so I think part of the game here for me is, I guess my point of the day today is this is the next milestone for me to hit mentally and emotionally, to be able to handle bigger swings, to be able to handle my account balance losing $100, $200 something at a time per one trade. I've had negative $200 days before, but they've usually been spread out of like 4 or 5 different attempts at different trades, right? Maybe even more. And so I feel like I get more attempts to swing. I get more at bats, if you will. I get more shots to take. This is a much more expensive shot to take, which is the same 3-to-1 risk ratio, which happened easily. Would have been very rewarding. It would have been a $600 day. In one trade, I would have made way more than any of my winning days last week with one trade. And so this is the next level for me. Opening breakout on the energy markets and just being able to afford it and tolerate and just handle that kind of a swing with this much money at stake, right? So, and this coming after a day of me saying like, oh, I'm going to take multiple contracts. Imagine I take multiple contracts here where I take, I'm just going to take one contract for a 1-to-1 ratio and another contract for the 3-to-1. Imagine I did that and lost both trades. I would have been out $400, and that definitely would have put me on tilt. I know myself enough to like this. Even when I lost I guess the point of the video today is also the title says that I actually ended up with it was pretty much a break-even day. I actually ended up with $7 profit. I'll get into how I made up this loss in a moment. But the other aspect of this vlog that I'm committed to is to talk about the mental game and the emotional game, which I don't think gets enough attention, and that's way more important than any breakout strategy or system or candlestick charts or indicators or whatever. It's the mental and emotional game. That's why I'm harping on it so much. I am just sharing where all of this is really coming from from myself. So there are some ways in retrospect, there are some warning signs that I could have taken a look at. There is a little bit, this is a 15-minute, if I go to even a 30-minute, there were some big warning signs indicating that this is probably not the best idea to take this short, because there's like double tweezer, right? And I will say that it's a little bit more common to see these on an asset class that moves literally $10 per point. This is going to be way more common to see. That's absolutely true, but still, it couldn't break. Couldn't break here. Right, and it was, the RSI is not dropping below 40 on this trend time frame, and so it's just like it just can't. It can't really say that this is a bearish momentum. Plus, you can see that the 8-period EMA is what is considerably higher than the 89-period EMA, which is the red line. There's a lot of indication here that the overall trend is also, kind of is going up. This was a pullback. There was a lot of evidence pointing to the fact that this is just a pullback and a retracement, and it was going to bounce off the zone here. There's bounce off the 89 moving average. There's a lot of reasons to suspect that this would move. This was bounce and go long. But in the moment, I was not thinking that. In the moment, I was like, "Holy crap! Am I going to stick to my guns? This is a 5-minute trade. Is this the right entry? This is a really expensive trade. It's a $200 risk. Am I really willing?" So that's the kind of crap that my mind was filled with. And in hindsight, I did not get to see any of these things, right? Because I was looking for, I was looking for the opening breakout, and I had a little bit of tunnel vision. But all in all, I am glad, and I'm not as pissed because I did make up my losses and I did pretty much break even. Technically, I profited, $7, but to me that's like virtually a break even. Almost the same thing. Contract prices and commission fees. I don't know. Do I even $3 or $4 left at the end of that. I don't even know, right? So let's look at the winning trade that I had, which was the same thing. It was the same thing on opening breakout, but I took profit a little early. Because I think I got a little skittish because of the loss that I took on the oil, on the crude oil trade. I didn't miss out on too much, but I gave myself just a 3-to-1, right? I reacted, and what did I do here? Okay, so let's go down to the 15-minute time frame for the NASDAQ, and right after the opening 930 candle, okay, so this is my range right here, right, like immediately, almost immediately after the opening 15 minutes, I got in. And almost immediately, like it's just yeah, it was like 2 hours later, I got out. If I had stayed in, I could have gone for 100 points. Usually, I think I got in. I think I got it. So yeah, I'm pretty sure I got in. I was definitely debating whether I should get in if it pulls back to the even 10,000 because I like that. It gives myself a little bit more cushion, or if I just took the high. I think I just took the high of this candle at 10,012, and I gave myself 10,000. I gave myself 75 points. It was a 25, 75, 3-to-1 reward risk ratio trade. Say that 3 times fast. Jeez. So I did get 75 points out of it. I could have scraped 100. I was debating. But, you know, I told myself, you know what, if I get 75, I'll break even for the day, and I'll just be satisfied that it was a break-even day. And I'll walk away, and I'll be done. I'm not gonna trade when not in the best emotional and mental state about it, where I'm like kind of annoyed at crude oil and what it did to me. You know, not that crude oil did anything wrong, and not that I'm blaming. I am just very, very aware of the fact that this didn't go my way, and I didn't like it, and I could tell, like, you know what, I am not as confident, and I'm not entering trades with as much like assertiveness and authority and conviction. Like we were talking about last week, like I was saying last week, conviction is what you need. Looking back here, I guess, you know, it just wants to tease me, like that I could have had the 3-to-1. Let me see here. The 3-to-1 would have been quite easy, right around there, right? The 3-to-1 would have been pretty nice. $640 win, all that jazz. It coulda, woulda, shoulda worked, but I didn't catch it, and so for me, this is just a matter of, like, this is like for me the advanced move, or the advanced security for me to work up to. Even though I know it, I can't do it yet because my emotional tolerance to the swing of watching my account drop in increments of $10 a point is just, man, it's just a roller coaster. It's a lot to handle, and so for opening breakouts, energy is like a I'm gonna look at it for sure because I wanna get to the point where I can handle it. But I also am gonna be very, very mindful of the fact that I'm taking. Oftentimes, I'll be taking hundreds of dollars of risk at a time, which doesn't leave much room for anything else. Like, I'm really kind of putting all my eggs in one basket if I really am committed to this. So it's definitely something I'm going to keep an eye on and analyze, and I'll bring it into the conversation going forward. But I might not take this trade, even though I see it every day. I might not take it until I have at least a $10,000 account instead of a $5,000 or $6,000 account. just to keep like risk management in check. But yeah. Anyway, today the lesson for today is, you know, thank you NASDAQ for giving me. Oh, maybe it wasn't the NASDAQ. Was it the NASDAQ? I thought I took a trade off the NASDAQ. But maybe it was the S&P. No, it wasn't NASDAQ. Okay. So for some reason, the arrows just didn't show. So yes. So the point of the day today is thank you NASDAQ for giving me a break-even day. I'm relieved. It kind of just hit the reset button. Today was just like a push kind of a day. And like in blackjack, I always say a push is a win. You know, this when you can walk away without losing money, that's a good day. Tomorrow I'll be doing more of the same. If you want to see more daily content just like this, make sure you stay subscribed. Tomorrow I'll take a bunch of new trades and we'll come in here and talk about why they worked, why didn't they work, and what more importantly what the mental game was, and what the emotional experience was actually taking these trades and summarizing them, hopefully staying green along the way. So that's about it for today's video. Thanks for joining us, and stay tuned for the next video from